Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, it is Monday after. Last Friday was, oh my gosh, man, last Friday, I mean, of course, the non-farms coming in and being good, I think was a big surprise. But then those PMIs coming in and being really bad, and the amount that the market reacted to that was just insane. And over the course of the course of the day, I think that the treasuries, like, net cumulative delta was 200k. So we had some really big moves on Friday, and as such we should expect to see some backwash and rebalancing today. That doesn't necessarily mean a pullback, but I think that you're going to see more activity today than you normally would on a no news Monday. So, but with that in mind, it is a no news Monday, so that baseline is a little bit lower, right? Let's come into the charts, see what we've done over the weekend. Here we got treasuries. Well, let's do it with CN here. Treasury is a big move up. There has been a pullback overnight, but at the moment they're pointed up, trying to recover that little drop there. By the way, I need to bring the volume on this down, don't I? There we go. That's a little better. S&P 500 holding its gains, pointed higher at the moment. Oil also. Well, oil did not react to the Friday news as strongly, but they're pointed up. Natural gas kind of doing this. I mean, natural gas has been on a long downtrend for the past 2 weeks or so, which is kind of interesting, but gold and silver are doing quite well. Copper looking good. And we got Bitcoin, you know, they didn't jump on that news too much, but there's been some extension over the weekend and they have finally recovered 1700k. Meanwhile, the dollar still looking weak. So that's the biggest thing I think for us to note here. Is the dollar strength has been like one of the key drivers for a weakness in everything else. If we're seeing the dollar weaken here, then we could maybe see some of these trends continue. So that's interesting. So we have to keep an eye on the dollar. This is definitely falling here. Let's see here. I'm not hearing myself quite as much as I would like to. I think part of that is just my there we go. These I changed like the earpads on the headphones, and so I think it changed the sound profile a little bit, made it a little bit more bassy or something like that. I don't know. Anyways, so let's next thing, let's just go over here, check our traders, see if we got anything. Squawk Box Steve Leishman tweeted an hour ago, the Federal Reserve is talking as hawkish as ever despite a slowdown in wage growth and contracting service sector. Steve Leishman takes a look at whether the Fed is really paying attention to the data. If we come over here, I don't have anything really during our, well, we just in 3 minutes we got Canadian building permits month over month. Bank of England's Bill will be speaking at 10:30 Eastern time. We also have 3 and 6 month bill auctions, Fed's Bosick and Fed's Daly at 12:30. So that's going to be the important ones, because here's the thing. After that really extended move up, the yields in particular, so look at yields all the way down at let's just say below 3.6. So we're seeing a continuing of easing financial conditions. We're seeing a continuation of easing financial conditions. That is not what the Federal Reserve wants. So I would not be the least bit surprised if the Federal Reserve comes out here today and tomorrow and smacks the market back down super hard. I think that's a really, really big risk that we need to keep a lookout for today. What that means for our treasuries here, I'm not so sure. One of the things that I've been seeing over in equities land, a lot of retail selling. I don't know if the retail traders have much more to sell, but it looks like they're selling. And we also are in like stock buyback blackout period. Also note that a minimum corporate tax goes into effect this year. That's going to affect stocks. So I think that in equities, it may be difficult / range bound going into the end of the month. When we get into February, flows look a little bit better. But until then, I think that trading might be difficult here in ES. What that means for us in the treasuries, I'm not sure. But I think that the more dominant factor here in the treasuries is going to be the next set of comments from the Federal Reserve, right? Back to Twitter here. Nick Timmeros, Fed research on counter-cyclical fiscal policies. We assessed the effectiveness of 3 fiscal stimulus policies employed during recent recessions. Unemployment insurance extensions are the clear bang for the buck winner. Of course. We conclude that extended UI benefits. Unemployment. This is a Canadian data, by the way. 14.1%. That's actually a lot. Well, that's good because Canada has been having real big problems with that stuff lately. Back to here. We conclude that extended unemployment benefits should be the first weapon employed from this arsenal, as they have a greater welfare benefit than stimulus checks and a similar multiplied bang for the buck. But a disadvantage is that the total amount of stimulus that can be accomplished with the UI extension is constrained by the fact that only a limited number of people become unemployed. If more stimulation is called for than can be accomplished by the unemployment insurance extension, checks have the advantage that their effects scale almost linearly in the size of the stimulus. The wage tax cut is also, in principle, scalable, but its effects are smaller than those of checks because recipients have lower MPCs and marginal utility than check and unemployment insurance recipients. Okay, so they're saying that it is better to give people stimulus checks than it is to cut wage taxes if you want to stimulate the economy. Probably true. The issue I think that I have with stimulus checks is that it kind of becomes this political football that people want to keep going. And it can quickly spiral into inflationary policy, which is basically what happened during COVID, right? The policies we analyze here are deliberately stylized and therefore may not match any particular policy actually implemented historically, but the tools we are using could be easily modified to evaluate a number of other policies. For example, in the COVID-19 recession in the US, not only was the duration of unemployment insurance benefits extended, but those benefits were also supplemented by very substantial extra payments to every unemployment insurance recipient. We did not calibrate the model to match this particular policy, but the framework could easily accommodate such an analysis. So there's going to be more from this. But this is, I don't know, this is like what we've always known. The Keynesian monetary framework research has always been really well suited to this kind of research. I wonder if the way that they're doing it was different, but it gives the same answer that we've always had: is unemployment insurance is better, and that checks would be better than a tax cut. I don't know. It's interesting that they're doing it that way. That's that the Fed is doing that research and that Nick Timmerose highlighted it. Brennigan Barrett, the Bank of England speak has been mostly silent since meeting in mid-December when we had a three-way split 261. The complete lack of consensus is likely to intensify as the macro backdrop intensifies. Mr. HUW, who today represents the center who voted for 50 basis point hikes in December. He is dovish and likely to pivot. Okay. So we got Bank of England pill today, right? That's... Oh, here in Wall Street Jesus is giving us the CTA positioning model. It looks like the CTAs are positioned short in bond world. So this whole, I don't know if this includes like from Friday, but I really think that there was some big players that were kind of surprised by that news and had to puke big time. And sometimes I've found those kinds of situations to be you know, counter signals. They're very much along the dollar, though. But I digress. It says that the CTAs are being most aggressive in the treasuries right now, so that could exacerbate volatility, right? You know what, though? Volatility is not too bad this morning. Like, they're putting up 1200s. We should note that in Discord. There's just somebody in Discord that's like, feel free to DM me, and they did it in every channel, which I don't think I can say is against the rules, but I'm definitely not going to make them irregular. Because I'm already suspicious of them. I should note that those CTAs, it's very much in the 2-year. 64% short 2-year, 40% short 10-year. Which is probably why we saw so much steepening on Friday. Scrolling through here. Man, when Bitfinex on Twitter starts tweeting, he really freaking tweets. New Federal Reserve research on economic news coverage. 3 findings. There is no significant negativity bias in economic news coverage. Oh, really? That might be a factor of the time that we're in, but or the time that was done over, but okay. Consumption reacts to bad news, but not to good news. Huh. Bad news is more informative and affects expectations. Oh, that is such a good point. Oh, we can use that. So, right, we've always been like, okay, changes in expectations about future fundamentals is a strong driver of order flows. But what we should note there is that negative changes in future expectations is a stronger driver of order flow than positive changes in expectations. Isn't that interesting? But again, I don't know. I'm seeing a lot of this Fed research that Nick Timmeros is posting. I'm kind of like, wow, things that I don't think we needed a Fed study to tell us. Michael J. Berry, you are the cheating generation, but if AI does your writing for you, you still lose. Okay. Not sure what he's on about there, but. Also from Nick Timmeros, we also discovered whether and why a Phillips curve-centric model for forecasting inflation has returned to the forefront of policy making. Evans, policymakers can't have a forecast that's just sticking your finger up in the air and seeing where the wind's blowing. Oh wait, let's go back a little bit further. Retiring Chicago Fed President Charles Evans says he is hopeful milder inflation data would allow for the Fed to return to raising interest rates in more traditional 25 basis points increments beginning with its next meeting. Going forward, the deceleration in goods prices inflation has been important and noteworthy. It's the service side, and that's how that behaves, that I think is going to be a little more indicative of whether or not the policy is adequately restrictive or something more has to be done. Okay. Well, I tell you what, over here in the treasuries, it seems like there's been a lot of fidgeting over here, but it's been in an awfully tight range. A couple of ticks up there, and maybe they try and pressure the higher end of the range and try and continue the uptrend from Friday. Morning, Octavius. How are you? I'm thinking today might be a difficult day for me to focus because I think that there could be some opportunities. I'm a little bit shaky on it, on whether there will be or not, and whether I want to try and trade it or not. So there's that. I'm not 100% sure. It's kind of a Monday, you know, and I have a lot of things I feel like I want to say today. So I'm going to be fighting like I want to yap versus should I be in a trade. But we got to be careful here. There was, you know, we did move up there, but I didn't actually see volume behind it. So you would maybe think that that's like the start of a trend, but I'm not actually getting like all of the confirming signals of that yet. But if we were to get like large meta orders pushing in one direction, I feel like that it probably would be on the long side. Let's see here. Larry H. Summers. The Fed thinks inflation is the primary concern. They explicitly recognize there's going to need 2 billion increases in unemployment to contain inflation. They recognize the salience in some labor market developments as a kind of super core measure of inflation. They're showing awareness of the fact that the neutral interest rate is a real interest rate concept rather than a nominal interest rate concept. They're recognizing the trade-off is not, by the way, unemployment and inflation, but I don't know what BTW means to him, but it must not mean, by the way, unemployment and the level of entrenched in inflation. I think it was saying something important there, but I think it went over my head. It's like that's now we're getting into like Friday, so. Oh yeah, Mark, one of our friends on LinkedIn talking about the Madoff series. If you haven't watched the Bernie Madoff, The Monster of Wall Street on Netflix, highly recommend watching it. It was very incredibly interesting. It was so curious to me. Like the whole thing was Bernie had an incredibly successful like market making business. Don't spoil it. Well, I'll only talk about things that happened in the first one, right? By the way, glad to see you're still around, Sophie. The thing that was interesting was like really early on, he had this market making business, and then he started an investment advisor business, and he took money in from just like a couple of friends, like family friends and stuff. So it was only about like $30,000 or something like that. And there was a big market downturn, and he was kind of in some risky things, let's say. And so they lost about $30,000. And instead of saying, well, we screwed up and we lost $30,000 or whatever, he went and got a loan from somebody else and made those people whole again. And then ever after that, all of the money that he took in, he didn't invest it. So I think like what it sounds like to me is that Bernie Madoff was a narcissist, right? He was really concerned about what other people thought of him, and he couldn't handle the hit to his ego of losing money and losing other people's money. And it was so much that after he got burned once, he just couldn't, because the whole thing was they were putting the money in, it was completely a Ponzi scheme, and they weren't investing it at all. Why didn't he try? He could have tried investing it still. I can't believe, like, if it was me and there was a wad of, I wouldn't be able to help but have to invest it in things, you know. I don't understand how you have millions, billions of dollars and you just let it sit in cash. Are you kidding me, man? But it was so interesting. I find often that when we have people that do really awful things in the financial industry, let's say, we want to paint them as like monsters. And of course, what he did was monstrous. But I think that people are not that far away from being Bernie themselves. I don't think people realize how close, because I see it all the time. I see it all the time in trading, that people, they just don't want to take the loss, right? They just can't handle it. Like, they'll come in and they'll post in Discord every time that they win. They'll post in Discord, but then when they blow the account, they don't say anything, right? Because the reality is that they were never in it for the trading. They were never in it for the craft, which is, you know, how do we best manage the money? Or in the case of, you know, the particular commodity, how do we How do we best predict and understand what's going on in that particular issue, like what we do here in the 10-year, right? Instead, they're doing it for the praise of others. They want to come into, that's why they want to come into a chat room, is so that they can post things and everybody can think, oh, you're so good, etc., 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 right? And that's the thing that I see kill people. Like people that come in and they actually are dedicated, and it looks like maybe they could be on a path to, you know, actually doing this, but they can't get over the ego, you know? Think they'll go for the big order in ZF? It is an awfully big order. I don't know how long that's been there. I mean, right now, when you look at the action, it certainly seems like the pressure is to the upside. Like we're getting a little bit of an ascending triangle. The issue is I'm not sure that we really have a super clear predictor that there's large buyer out here to get it up to there. I mean, just to get it to 04 would take a decent amount of volume, and then to bust through 04, you know? So if you're just a technical trader, why would you go up there and try and get filled at 04? You know? Because it could just like dump on you. It's been there since Friday. So another thing something that we have to consider. So here's my approach to like large orders. A large order, especially a resting large order, is less likely to be informed trading, right? It's more likely to be a hedge based on some specific level of some sort. So that's why so often you see them just blow right through big orders like that. If it was like a Wednesday and we had them people saying stuff and I really thought that we were going to move up, then I would be all in. At the moment, though, you have to go short 3.58. That's a little... may actually be a better play if they do go up and trade it, to let them trade it and then see what happens. Oh, here we go. So I'm gonna read Martin's comment here, going back to the Madoff thing. What struck me too were the many similarities between Sam Bankman-Fried's fraud and Madoff. What a coincidence, and I did not know, is that Madoff had a profitable, legitimate market-making business on the 19th floor of his office, which financially bailed out the Ponzi investing advisement business on the 17th floor. The losses in the Ponzi eventually brought down everything, similar to what happened in FTX with Alameda Research. Yeah. And like in both instances, they're like really like Madoff said a lot with prosecutors, right? Like they have in the documentary, they have all of this, you know, like video of him talking to prosecutors and admitting the crimes, right? And like he felt really bad about it, and he was kind of like, I don't know why I did this. That's why I'm like, I think it's narcissism. And I think that, you know, just to reiterate, I think that day traders tend to lean towards narcissism more than other people, right? I think that a lot of people do this because they think that it's going to garner them the praise of the world, when the thing that's going to help you the most from, you know, a mental and social perspective in trading is going to be try to be a nobody. You know, you're just a small wheel in the cog. The social praise doesn't help you. Okay. Well, I do feel like that when it ticks, the liquidity is following it really well. Not as much there at 08 half, but I think that the market makers think that this range is okay. So I think that this 04 is certainly within the realm of possibility, right? Now I do see an opportunity here and just try. Okay. Interesting. So there is at least one robot willing to front run me or try and go with me. Interesting. See, I highly doubt anybody is going to buy into 3.58 at the moment, but the spread is working in their favor to go up there, that's for sure. There you go. Strong bid at 09 and aggressive hitting at 09 half. And some orders crashing into the liquidity in the micros. Oh, did they just trade it? It was 2,500. I don't see it there anymore, but it looks like 3,000 traded at 04, so okay, well now we get to a high from the overnight session in the treasuries. There was definitely some buy volume across the curve there. So isn't that kind of what we were saying though? Is like, well, they could just bust through it, but then what? Who's the buyer? Well, I have to say that whoever bought that looked pretty strong. So they could have some continuation for sure here. And they are breaching by about a tick the highs from Friday, but I think that the meta orders are probably gonna I think that you might get a post meta order regime change here. Well, they definitely came back like 2 ticks and looked some iceberging on 11. 13 companies expected an IG primary market Monday, says Bloomberg. Adds to heavy sovereign supply this week, both sides of the pond. Oh. "13 companies expected an IG primary market." That's... So I think that has to do with bonds. What would IG stand for? This is going to be so they are retracing that whole thing awfully quick, man. Yeah, Instagram. I don't know what it stands for. It must be like initial. I don't know. I think what they're saying is that companies are offering bonds out this week. So what this guy is saying is that this is going to be pressure on bonds, probably. Let's see if I can find the story on Bloomberg. Over 800,000 UK households to see mortgage rates double in 2023. Yeah, that's not investment grade. Oh, yeah, that must be it. 13 companies expected in the investment grade primary market on Monday, says Bloomberg, adds to the heavy sovereign supply this week, both sides of the pond. I think that's what it is. Yep. Well, I'm not too sure how I feel about the prices that I'm being given, but I think I have to take that opportunity right there. Means anything above BB or more or plus, right? Oh wait, BB is still investment grade? I need to go check that. I think that's a thing on my Series 65. I thought that it was only the A's. like the thing that weirds me out. Explain this to me, actually. Does it seem like it's like investment grade junk? Like there's not very much middle ground for some reason. You know what I mean? I guess that's kind of probably the nature of bonds, because like either they're likely to pay it back or they're not. But like, it just seems like that there's not very much middle ground. Yeah, that's why it's pretty much like BB plus is investment grade and BB is high yield. So I'm guessing that BB plus is BB plus just because those are like smaller, less established companies. So I wonder what is going to happen to like well, okay, so don't like so where I took a trade, that was a good hit, but the flows aren't cooperating with me right now. What was I gonna say? Caesar straight up, some dude incorporated on Friday and offered on Monday. Yeah, I mean, I guess it's just kind of the like when you think about think about home mortgages, right? Most people pay their home mortgage, right? And the people that are likely to not pay their home mortgage, like they start to develop the history of it. Like there's definitely a dichotomy in it. Okay, down ticket 08. Are we getting the volume? Yeah, it is. Like it when it ticked back up, the sellers definitely ate up. This is really starting to look to me like I don't know what created the impetus for us to move up, but maybe there was a flip there, like because now all of a sudden the sellers who weren't really there before are just gobbling up all of the bids. I'd say they're being pretty nonchalant about it, but in areas where it matters, they're taking them out. Love me some 808s. Oh yeah. It looks like they're gonna range around here a bit, but so I think I need to be careful about making too big of a conclusion here, but just to note that the sellers did at points take some big moves there. Ooh, wow, they got back up there to the high awfully fast. Man. Is the dollar doing anything here? Is the 6J doing anything here? Not, well, I mean, the 6J is still tilted to the upside. The 6J is still tilted to the upside. This is really interesting. Not liking the spreads in the micros here at the moment. I don't think that this volatility is going to help. Like, I don't think it would take much to get back to 08.5. I don't know if that's actually going to happen. So if C's are some dude that incorporated on Friday and offered on Monday, like, is there actually much demand for those? Like do those people actually get some funding? like if I went out and if I said I'm going to incorporate on Friday and offer on Monday some investment advisory business or something, I start offering bonds to fund my business, do you think that how much biting would I get? Because I would expect nobody to buy my bonds. I would expect zero money to come from that. I mean, would you say no to a 15% yield with a 9% coupon? I mean, I might, yeah, I would be super suspicious of it. Yes. I guess that's one of those ones where you don't have to win every one, right? When it's other people's money, not your own. So I don't get this one. Everybody acts like it's not a big deal when it's other, or like that you can be more reckless when it's other people's money. That's like it being other people's money is like makes me so nervous. Like, so I guess we should get into this. You are ahead. So here's what I've been thinking about over the weekend. So a couple of weeks ago, I think it was the CEO of BlackRock, and I didn't really highlight this much at the time because there's all this other stuff going on, and I kind of wanted to give us some time to digest it and come into a quieter time in the market when we can really think about it. But the CEO of BlackRock came out and said that the challenges that we're facing may require a more active approach to investing, essentially. This is like a huge glaring red flag. Well, should I say red flag? I mean, it's because that would imply that like that's something bad about BlackRock or something. This is like a flashing red light. Like, okay, the manager of the largest passive investing firm in the world is saying we may require a more active approach. That's huge. That's huge. Like, why would the CEO of BlackRock say something like that? It is not in favor for his business to be saying, oh, well, maybe we shouldn't be doing passive investing as much, No matter what happens, your personal safety is assured when dealing with other people's money, whereas with your own money, you're talking about your own survival. I don't know about that one. Like, I want to be able to continue doing business, and I want people to continue to trust me with their money, and I'm in it for the long run. like that's the whole thing. Is if I go and I make a big bet, like let's just say that I went all in on the treasuries here today for some reason, right? And I lost it all. I know that I could refund and go back into it. But if there was like a disaster with like my funds money, you might never recover that. Unacceptable. Like, the most important thing is you able to continue playing the game. Anyways, so why would the CEO of BlackRock be saying, even though it's like totally not in his best interest to be saying that we might need to take a more active approach? As long as you don't completely make a butt of it, you're fine. Even if you lag the market, most investors don't pay that much attention. Yeah, you might be right. But like here's the thing: is I think that the CEO of BlackRock is right. And I think it's just because it really is shifting, and I think that for him and his company in particular, that means that they're going to have to adjust, essentially, right? Because the world did change. Like 2022 was kind of the year where we realized that the world has changed, right? We don't exactly understand what it is, but clearly in 2022 we've realized that it ain't going back to normal, right? And that in the investing world has changed. Because everybody got hammered last year. Even it doesn't matter if you were in equities or what. Like everything kind of was disappointing in one degree or another, right? I think that 2023 is when we realize just how complicated things have gotten. So I would point to some research notes that Basar has been putting out. This is a guy who used to be a researcher for the Fed, and Zero Hedge really likes him because he's talking about like political instability, all these things. So there's like this big bias, like he's coming out, but I do think that he's right about some things, right? So the first thing is that the geopolitical situation is now much more volatile and is unlikely to go back to this stable world that we had, you know, for a while at least. Because basically what has happened is this. Everybody thinks that it's like, oh, the dollar is going to lose its supremacy because we're printing too much money and it's just going to become a weak currency. And then the response is always, oh yeah, where are you going to put your money? Russia? China? Like, yeah, they have currencies, but do you really want to put your money there? Well, what we're realizing now, or what I'm realizing now, is that doesn't have to matter in order for these other currencies to rise. Is essentially what has happened is that the barrier of entry into having an effective payments system, like the technology has gotten so advanced now that these countries can actually pull it off, that they can actually run payment systems and move large amounts of money between different banks and things like that. Things that previously you really needed Swift to do, right? Now all of these countries can do it, and so they're going to do it. Even though, so that doesn't mean that dollar stops being top dog, but it does mean that we move to a multipolar world when it comes to the monetary system, right? BlackRock is in trouble with the redemptions. It's tough to say, no, you can't have your money back because we put it all in. Well, yeah, but that's just the real estate one though, right? Real estate is like a rounding error on Bully. It's true. It's totally true. It's totally true. I think that, so there's that thing. Okay. So I'm just kind of highlighting this thing Pulsar said. And here's why I'm highlighting that thing that Pulsar said. He's saying that 60% equities, 40% bonds portfolio doesn't make sense anymore. He says that you need to have at least 20% in commodities. And he was also advocating a larger cash position and saying that, you know, you can make money from cash, right? I think it was like 40% equities, 20% commodities, 20% fixed income, 20% cash, something like that, right? I think that asset mixture makes sense, right? So now we have to sit down and think, okay, so what are some of the changes that are happening right now that would maybe affect what our long-term investing strategies should be, right? Well, I'll tell you one thing is that right now is like the time when the workforce should be the largest So like this whole thing with we don't have enough workers, it's only going to get worse, guys. It's only going to get worse because the baby boomers are retiring. The baby boomers retire, and that's like one of the largest segments of the population. There's not enough millennials and Gen Z to replace them. There just isn't. There just isn't. And you're losing like so like the baby boomers and the millennials are like about equal in size right now. So that's like half of your workforce leaving, right? And what happens when that workforce leaves? They're going to have to pull their money out of the market to pay for their retirement. Well, actually, a lot of them are going to have to keep working, actually, because a lot of baby boomers did not save enough. Okay, so a lot of them will keep working. But they're going to be drawing on their investments. They will. So we are quickly approaching this kind of line where potentially the amount of money that's being put into the market does not overcome the amount of money that's coming out of the market, right? So does that mean that the S&P 500 is just going to go down and it's just going to be like this bear market forever and ever and ever? No. But what I think it does mean is that things are like a lot more complicated than they used to be. I don't think that you can just put all of your money into an S&P 500 index fund and think like that's all you got to do and everything's fine now. I think that the world is becoming a lot more complicated. And like I said, in 2023, I think that we realize what that really means, right? So, another thing. So just a couple other like things that are coming through the pipe. We do have corporations are getting paid that minimum tax. That's going to hurt those tech companies. Okay. I'm pretty sure. I don't know when it will happen. It might be a long ways off, but I think it's inevitable that corporate buybacks get taxed at some point. Which really is kind of distorting the market. So maybe it's a good thing that goes away. But that's been one of the strong flows going into the markets. Another thing is that healthcare as a percentage of GDP is probably only going to continue to rise. So we're going to have trouble having to pay for this healthcare stuff. And meanwhile, like government expenditures, the government is going to become more pressured, right? Like right now, taxes as a percentage of GDP is like near highs. It's likely to come back, not just because Republicans are pushing back against it, but because you're going to have to like, you know, how are you going to pay for Medicare and things like that? Like you're going to have to pull back in other areas. So some of that money that would be normally coming into the markets because of government spending might not be there, right? Yeah, they should make it so dividends and buybacks have the same opportunity cost. I feel like that it has to happen, yeah. When it will happen and if there's the political will and everything is another matter. I don't know if it's because it doesn't seem like it's something that's going to happen in the next 2 years, but I think that, yeah, eventually the buybacks are probably going to be taxed. So in the next 30 years, probably buybacks are going to get taxed, right? So you look at all that, these are all like really huge outflows that are coming out of the markets. So what do we have to do to adjust, right? I think that we're going to have to think about what we're investing a lot more. You can't just put it in the index fund anymore. I think things like momentum make a lot more sense now. Like we have to put money into the things that are working and take money out of the things that are not working. And we can't just, you know, willy-nilly put money into the whole thing as a whole and expect to be as successful as we were in the past, because the investing future looks a lot more complicated, right? My solution is no tax on buybacks and no tax on dividends. Well, there you go. There you go. Like, here's the thing, actually, is if both had the same opportunity cost, I think that people would probably still lean towards buybacks. Like the positive effect that buybacks have on your stock price, like the CEOs make more money on buybacks than they do on dividends. They just do. So I don't, not only do I think that they might put a tax on buybacks, but it might be higher than the tax on dividends. But we'll see. Okay, so what implications does this have for all of us, right? Well, so for personal investments, number one is I think it means you have to invest more. You have to invest more, and you're going to have a wider asset mix, and you're going to have to think about it a lot more. This also means that for the baby boomers that are starting to retire, and I think that you're going to have the millennials more and more start to get into this category where you have to think about your retirement plans a lot more, to the point where an investment advisor is valuable. So really, this was all a big long way of saying, I think that we need investment advisors. I think that we need investment advisors. We need people to help others navigate this, because it's starting to look like this is going to be way more complicated than we thought. Like, we thought that everybody could just stay in the index fund and then they'll retire. And I'm looking at it now, and I'm like, no, that's actually not the case. That works until you're like in your 40s. And then once you're in your 40s, now you're going to have to be a little bit more sophisticated. Okay. So it's a good thing that I'm doing the Series 65, and I would encourage you guys to do it as well, because not everybody understands these things, but a lot of you guys here do. And we're going to need those skills. Now, this all kind of comes back in the backdrop. There is one positive flow that we have to talk about, right? And luckily for us, it is a really, really big flow that is going to be pervasive across almost every industry, and that is artificial intelligence, right? I mean, what we have right now is really baby stuff. It doesn't mean that the artificial intelligence is going to come for your job or anything like that. But what I think it does mean is that a lot of these costs that you had that made it really difficult to start a company up sometimes, like it was hard to start a company because you couldn't get the expertise, and I think the AI solves that. So yeah, I think that AI is going to be a huge benefit that will kind of help us through this. Then the other thing is that, again, like a lot of these things are inflationary. So I don't think that we can just assume that the Federal Reserve will turn the spigot back on. So everybody thinks that, like, we're having the downturn, maybe we'll go lower in the stock market, we'll bottom this first quarter. I actually think we're probably past the bottom, but that's not what everybody thinks, right? A lot of people are really bearish right now, but then they think that the Federal Reserve is just going to turn the money printer back on and we're going to be right back at highs. And I don't think that that's going to be the case. I think that inflation pressures are here to stay for a while, if only because of baby boomers retiring in the tight labor market. So yeah, I mentioned a lot of things there. I don't think that I was as organized on it all as maybe I should be. It's a little ADHD, but I think that the main takeaway there should be clear, right? So we've got some work to do. We've got some big work to do. Let the CEO make money. What's that got to do with me? Just let me make money. I mean, the issue is that the buybacks distort market prices. I mean, you can say it's legal and it's okay, but like if we want assets, so the issue is, we're going to need to be efficient. Essentially, we're going to need to be more efficient. We can't just say here is the top 500 companies and we're just going to put all the money into that. Right? We're going to have to think a lot more about which of those 500 companies are actually giving the most value. And are there some of those companies in there that aren't really valuable anymore? They're kind of past their peak. They're not adapting, etc., etc. Right? Okay. So if we need to do that, one of the things that helps us do that is an efficient market. The more reflective current prices are of all available information, the better able we are to make informed decisions about things like that, like where we should be putting our money, right? But when we're able to distort prices by just buying our own stock, and that can push prices very, very far away from what fundamental value is, it makes it more difficult for us to be efficient. So this is why I think that in the end, it would be a net positive for us if corporate buybacks were taxed.
And if anything, I would be like, no tax on dividends, but a tax on buybacks. That's nah. I think that there should be taxes on dividends, but I really feel that the less you tax middle class investment, the better. But what you gonna do? The politicians, they want the money. They're gonna get it. What you gonna do? That one's probably Seth's dream. Seth's dream of the middle class being able to invest their money tax free. I don't think it's ever gonna happen. Dividends shouldn't be taxed. So when you say shouldn't, well, okay, the money was already taxed going in. Not necessarily, but it is pretty crazy when you think about how the money is taxed. Like, especially when it's in an S corp, man. It's like it's taxed at every step of the way, and it gets taxed by the corporation. And then when the money comes to you, the investor, it gets taxed. And then, it's just nuts. And like the other thing you got to remember is that a lot of these investment vehicles that we have are really just tax deferred. Right? Like when you start pulling your money out of your 401k, you get taxed on that, right? It's retarded. And then it gets taxed when you spend it too by the state. Yep. That one is like one of my biggest pet peeves. Is a lot of conservatives say, oh, there shouldn't be any taxes. We should just have like a consumption tax. Oh, okay. Yes, that will really increase growth, is to tax consumption, right? So conservatives are always going on about how the more you tax something, the less of it you'll get. Well, okay. Consumption is basically what our economy is premised on. You need consumption. You don't want to tax it. You get taxed when you die. Yep. So there's this thing, like, the left doesn't want you to be able to pass your wealth on to your kids. I think that's completely the wrong approach. I think that's the wrong approach. I think that what you really want, like the ultimate goal, is that everybody has generational wealth, right? That would be the ultimate dream. That's something that we could have done maybe here with the baby boomers. It's like the baby boomers, they build this generational wealth, they pass it on to their kids, and then the population is less, the needs are less, and there's more efficiency, and so the kids can, that wealth can continue to get passed down from generation to generation, and it'll just make things a little bit easier to get started for everybody. But they're like, oh, that's not fair. Instead of saying, oh, well, okay, we got these people, they're into generational wealth, now let's get more people up in there. They're like, oh, we got to pull these guys down. It's like lobsters in a boiling pot, right? Stupid. Death taxes are dumb. Especially when with the businesses and stuff. Like, you can't pass your family business on. That's so dumb. No, I think, and not only that, but the ability to pass on wealth to your kids and to make life better for your kids, that's like the strongest incentive there is, guys. Why would you want to get rid of that? So dumb. So dumb. Just buy hard physical assets and give it to your kids when you die. That way your children don't get taxed. Well, I wish it was that simple. But I don't think that you can put all of it into housing, or you would have to put it all into like one big estate, and then the kids sell the estate. I don't think that would work. I am kind of wondering. So here's another thing that I wonder about, though, that just kind of jogs my memory, is like, are a lot of baby boomers going to start living with their millennial children? I think that might happen.
because my parents, they've done really well. Okay. They basically got to the point where like their expenses weren't very much. And so for the last like 10 years of my father's working life, he's been putting almost all of it into investment, right? Like we're talking about like more than 50% of his income going into investment. So they saved up a big wad. Okay. So I don't know what that means for like if I ever inherit money or whatever. But the thing is, I don't have to worry about taking care of them necessarily, right? Like I don't have to worry about, are they going to have a place to live? You know, if they have health problems, are they going to be able to pay for that? They've guaranteed that for themselves. Okay. But it seems to me like it would be convenient for them to live here. It's just, I mean, they live down the street, but it seems to me like it would be convenient for them to live here. And especially if they start getting older and you know, they're not as mobile and stuff. I think I'd rather have them here. I don't know if this house would work well for them because they'd have to sleep downstairs and they'd have to come up the stairs, but I think that it would be better for them to live here. I feel like, you know, that's the way that it always used to be. And I think maybe we're going to go back to that. Yeah. It would be good for my kids too. It's awesome to live so close. It is. I don't think that we take advantage of it as much as we should, but I don't know. I'm you know, the issue that I have in my life right now is still, I'm just so ADHD. So I've gotten to this part right here where like, you know, what are the things that I need to do that day and stuff, so that I can be efficient, and I'm getting pretty good at that. So the channel itself has been like really growing the last, like, well, let's say since the beginning of the year. Like for instance, so many more comments on videos this week and last week. Like it's really weird. Even videos that you know, not even the new videos, just like older videos, just lots of more comments for some reason. So for some reason the YouTube channel is doing a lot better. And normally that would be really hard for me to like keep track of everything that I need to do. There's been people been asking me for things and stuff like that. But I've been totally on top of it. But when it comes to like the larger big picture things about, okay, what do I need to do to kind of nudge my family in a certain way and things, I forget what I'm doing, man. Like, well, I need to do the dishes every day. I forget to do that, man. Like I want things to be clean so that the kids, it's an excellence thing. Takes pride in the state of their house. By the way, a decent little excursion on the sell side again. You know, I have, yeah, monitor that dude and coach him. Do interviews? Where is that coming from? I would totally be willing to do like podcasts and stuff like that. Just as long as it's, you know, I'm really super hyper cautious about who I get involved with, right? Because some people, I feel like that they're just like selling their soul to sell services or indicators or stuff like that. And I don't feel that they're following all the rules. And I've had people want to talk to me before, and I didn't think that they were following all the rules, you know. But you know, some of these other top guys in the futures trading space, if they wanted to get together, I would totally do it. Anyways, what was the point of all that? The point of all that was it seems like it would be convenient to have the parents over, and then they could help me with some of those things. To be like, oh, Seth, you want to do this, you want to do this. I do not have a problem with being reminded to do things and being told to do things and being nagged, because I know that I need it. To be honest, people are just tired of the fake gurus and all the fake videos on the internet about day trade and make 10K, and everyone is looking for real trading content. Maybe. I've noticed this kind of movement on TikTok overall against like courses. People trying to get you to pay for their course. Yeah. I mean, here's the thing that bothers me on that one is that humans are social learners, you've got to get past the bias that's created by being human. So humans are social learners, so their approach to this is find somebody that was successful at the thing and then copy what they're doing. Or if you've been successful, tell people how you did it so that they can try and duplicate it, right? And so what happens is you get people that were successful with something like dropshipping. There were people that legitimately made like real money off of dropshipping, for instance, right? So then they turn around and they tell everybody how to do the drop shipping. Well, way to go, idiot. You just brought more people into the market, and now everybody knows the tactics that you're using, so they don't have an edge anymore. It doesn't work in a competitive marketplace. So I don't want to hear about how to do drop shipping. I want to hear about how did you identify, how were you able to learn the things that gave you the edge, right? How were you, what were the things that helped you see the things that were going to be an edge, right? Those are the things that you really want to be learning, right? Because if you just try and duplicate what somebody else did, it's not going to be competitive anymore. So it looks like here for the start of the S&P 500 that they are turning to the downside. You got to think those sellers have 3,900 in their sights. We'll see if they get there. Another 2,500 MBO at evens and ZF will force option rolls. How are things going? I think things are going well. The trading has just kind of been okay. Like, I haven't traded a whole lot. I didn't take any trades on Friday because I had decided to be risk off, but after the PMI I should have taken a trade. I'm kind of disappointed that I didn't do anything about that one, but I've been catching like okay trades. It's just like they're only like $10. Here on this trade, I'm actually thinking about doing something to manage it because the overall net volume has been to the long side. Though the spread has been helping us up the ante. I don't think that No News Monday is the time to up the ante. Yeah, the S&P 500 does not look happy, guys. Yeah, so I'm waiting to see some sell volume in the 10-year here, and it's just not, even though the price has kind of been doing okay, and the price that I caught was okay, I'm not actually getting like strong selling in the treasury. I guess we're getting strong selling in the 30-year though. It looks like actually that the 10-year is kind of like being buoyed a little bit, because look, the 5 years down, the 30 years down, and the 10-year didn't move. What's with that? Oh, you're asking about my health? It's been okay. I haven't been working out as hard as I want to be, but I seem to be breathing heavy. No, I think that what you're catching me on there is just like I am speaking so much I forget to breathe. Maybe I'm getting sick. My wife and my child are sick. I could be like to the sick where I can't tell yet, but that I am getting sick. Okay, so that helped a little bit. Did get a little bit of selling there.
anyways, so I think what you guys are talking about before, I think the next thing goes to like, what do we do with our content and so forth? Because I have a bunch of videos, like the ones that I really wanted to get out, I think are out. There's one that I really want to get out, but like I don't feel like that the content is quite there yet, and that is the macro video. Like finding a way to like consolidate that all into a video that would be engaging and stuff is really hard. Excuse me. But it's one of the things that I feel like that traders have the hardest time with. So we definitely want to make videos about it. So there's a macro video. I think I want to make a video that's like that would help the channel a lot, would be like, how much money do you need to day trade, right? I was also thinking on Friday about making a video which is like, this is why you suck at day trading. Here are the things that like everybody's messing up with. Because when we look at like the offers that we have here on the channel, the offers are all designed to help you with those major pain points, right? So you're not getting the right information. So you have a new squawk, for instance. You don't have level 2, so we got Jigsaw for you. Indicators so that you can see the correlations and so forth, right? So we might make that one, or I might bump that one up on the list. But I think that, again, like it seems like that the world is getting more complicated, and so I want to make more content that is analysis about how we navigate that, and more content that is about portfolio management. Okay. So there was a big iceberg at 07.5, and then they bought it up 2 ticks. I think a video about execution, position sizing, correct stop loss placement will be more in demand. I don't know about that. So here's the way that you got to think about it. What would be the thing in the thumbnail that would cause everybody to be like, oh, I need to click this video, right? So I think if I make a video that is like, this is why you suck at day trading, I think that would garner a lot of clicks, right? Versus sizing and stop loss placement, or no, because that's a lot more, you're talking about things where we don't really have clear like mathematical guidelines beyond a few basics. So I don't know. Plus there's a lot of content about that already. But I guess the video that I have where we do talk about that stuff is like performance metrics, right? But if we're going to make a video about that, like you have to find like, what's the clickbaity thumbnail that will get people to click on that one, right? Seconds, I'm sorry. Maybe it was condescending. I guess the reason why I'm saying that is because for a lot of people, like where they put their stop and their target is like really the only edge that they have. And that doesn't give you very much edge. So I'm still seeing as it ticks, the liquidity stack behind the ticks really well. I'm seeing that on both sides. The sellers just took out a relatively large block right there, 1,800 bucks at 07.5, the bottom of the end of the range. And the 30-year is still looking really heavy. And I'll put down a video about position sizing and
so forth in there though on my list. I don't think that's something that I've ever made a specific video about. Because we're in a place where we're quite flexible, you know? We're in a super narrow range. Yeah. Well, I think what happened was there was some selling, right? Like after that initial big spike up, there was some selling, and now it's kind of turned into a wash. But look, the sellers are making progress there. It's really slow because the bids aren't necessarily jumping out of the way. But look at the 30-year down at it near its lows. I guess for it to be a big deal in the 30-year, they need to be like below 16, but still. Yeah, another uptick. So even though the action has been a little bit to the downside, we're still not getting like strong sell volume. It's been sideways. And the S&P 500 has recovered and is on the way up too. Maybe I shouldn't have done that. Okay, so I just decided to put a test order out there to see if they would hit me at +5 for me, and they immediately took it. You tried? Well, I've messed around with ChatGPT a lot. To be honest with you, ChatGPT doesn't really provide a whole lot of benefit for me in the coding world. At least not like the way that you're seeing most people do it, where it's like, write me a program that's like X, Y, and Z. I don't have a problem doing that. If I'm having, so there's some things where they're like writing better debugging and stuff like that, that might be of benefit to me when I'm having a hard time fixing something. But I think it's so funny. All these people are like, oh, we had ChatGPT write us a robot. Now we're trading it and everything. And I'm like, oh, you guys are so dumb. This is not going to end well for you. Well, since my exit there, it is going well. It seems like that the buyers are coming in here again. It's almost like they waited. They're like, let's not screw Seth over on a Monday. Let's wait for him to give up on this, and then we'll move it back up. Right? Tell ChatGPT to write a soap opera, right? Like the thing that I keep coming back to with chat, I guess this is why I was talking about this earlier in the stream and why I'm thinking about it so much, is that ChatGPT doesn't give you a competitive edge, right? ChatGPT helps you do the things that everybody else was doing to the level that everybody else was doing it at, right? Because it's just taking existing content and rearranging it into, so whether it's programming or marketing or anything else like that, it's only just gonna help you repurpose content that already exists out there. So what is it that you're doing that's gonna give you an advantage, right? So the reason why I made that ChatGPT video about Holmgren Chris was there was like a point to that, right? The point is that the content that it generates is like quite vapid. Like it gave a really good summary of what the Holmgren Chris algorithm is about, but it didn't actually provide any content that was actually useful to you. It was just kind of like word salad, right? Whereas I can come in and I can make, later on, I'll make a real video about on-grain crust and you really understand what it's doing and why it's valuable to you. I do find it interesting to see what it decides to say, though, when you ask it certain things. Like I said, like the places where the artificial intelligence I think is going to be valuable, I think that there's going to be much more sophisticated applications of it. Okay, so like for instance, AI doctor and lawyer, right? So there are a lot of things where there are a lot of people that are doing jobs that are actually fairly sophisticated jobs. Like they require you to have a lot of knowledge. Like a doctor, being a doctor requires you to have a lot of knowledge, right? And Chat GPT, or what the artificial intelligence is really good at, is looking at a really, really big what is the word? It's able to look at a lot of data to find the answers and stuff like that, right? So in the case of like, oh well, I have a cold and these are the symptoms that I have, and so on and so forth, an AI that can tell you those things, and then you can just have a human verify it, right? And then the doctor is just the verification thing that teaches the feedback mechanism that the AI optimizes on, right? So now the doctor can focus on more complicated things where, it's like situations that we've never encountered before, right? Or same with the lawyer, right? This is where it becomes more efficient. Yeah, there's some boilerplate code out there that is getting automated away. I mean, it was getting automated away before Chat GPT. I think the thing that's so funny is that like the place where companies are spending the most money right now, in my observations, is like on the infrastructure side, because they have this software, but they don't have ways of making the software integrate and play nicely with all of the different monitoring and deployment tools that they have. And the AI can't do that, I don't think. So you get what I mean? Like, AI is going to be transformational to our society. It's just that most of the people that you're seeing on TikTok right now talking about it are missing how it's actually going to be important, because they can't get over the, oh, hey, here's how you can get ChatGPT to make you $1 million, blah, 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 blah. No, it's not it, right? It's where it's at is allowing the AI to do all of the trivial stuff so that you can work on the real problems. In a thing market, you need to go to the street of brokers and look for flow, or if you don't have it, participate in the vols. That is how it works. AI anonymous Indian with a keyboard till it replaces my barber. I'm also wonder how we might be able to utilize AI for investment advising, right? Like the big issue with an AI or with ChatGPT in particular is that it doesn't use logic. So it doesn't know if the information that it's pulling from is correct or accurate. And it doesn't know if the content that it generated was accurate, right? So that presents some big problems when you actually need to perform, right? When it's investing, for instance, right? But we could still utilize where it's strong, which is its ability to aggregate a large amount of data, right? Take all of the research reports for that week and have ChatGPT summarize it, for instance. Or not ChatGPT, but just a GPT model summarize it for us. The same with the weather. You can't be 100%. Well, that one's a little bit different. You're talking about a different issue, right? You're talking about that some systems are just too complicated for us to predict, is really what the weather is. That just makes it even more real. Most of us humans don't use logic either. Those who do use logic regularly are called mental. Oh my gosh. So we're talking about something else here. Autism. I want to talk about autism. I am ADHD. I'm not autistic, okay? But what I'm starting to realize is that ADHD can make you autistic, basically, because ADHD is really about this chemical imbalance in your brain caused by genetics, right? And it's like at the cellular level, right? Autism is like the high level problem. It's the brain is structured differently, and if you're not getting the dopamine and stuff, those changes in how the brain develops can be significant enough that then you get autism, for instance, right? And where does this manifest the most? Well, it's in the frontal cortex, right? So people that have autism, they can be lacking in certain executive functioning areas, right? But then their brain compensates by building up other areas of the brain, right? So this is how you get these people that like they have a really intense interest in this one thing, and they might not always apply it correctly. That's what kind of the weird thing about it is that they'll just get really hyper focused on this one thing, and they're not able to see that it doesn't apply in this instance, or they're not able to see that what they're doing is having a detrimental effect on their goals, right? But I think it's so interesting that autistic people, because of this kind of there's like this linear thinking as opposed to being able to look at a large number of things and like filter most of them out, right? So when you come into a lot of these analysis situations and like scientific things, this kind of autistic way of thinking is really effective. I don't think that it's that they have an advantage so much as it is that because we're able to use this kind of heuristic sort of thinking can be so effective that most people overuse it, and they're not able to see when they need to go into the more linear logical thinking ways of doing things, right? Whereas the autistic person just always goes to that because it's more stronger on them, right? That's autistic. The ADHD person has the other issue, has the opposite issue, which is like their executive functioning brain is like there. It's just not fast enough, right? And you don't have any control over it, so it just sees all of the connections, right? Rhythmic issues seem solved, but setups are suboptimal for me today. Yeah, you know what? It's been awfully tight, Lucas. I was able to grab $5. I don't know. I'm happy with my exit there. Actually, you know what? I'm happy with my entry and my exit, because even though I think that the larger like premise didn't play out, I got good positioning in it. Like that's the way that like a scalp or a should be. So I found a spot where I was able to take out some liquidity and give myself an advantage, and then I got the fill. They filled me, and I was right. Or no, I didn't. So I had put like an order out at 585 to see what will they do, and they immediately hit me, and I was like, oh, that's not what I expected. So the thing with autism, I've been on TikTok because of my son. The TikTok algorithm has figured out that like either I'm autistic or I have a family member, but I'm interested in autism. It's figured that out. And so I've been getting some videos from people that are like, they're autistic and their special interest is psychology. And how to interact with allistic people, sort of a thing. And there's this one girl. She's like, here's the type of relationship that your neurotypicals love, but they'll never admit it to you. And then she basically talks about like the classic narcissist. So it's like lie to them about how many resources you have and how much you're going to help them, so that they want to be, they want access to your resources and so forth. And then like create a bunch of drama and everything, and they'll keep coming back to you because they get more emotion out from you, right? It's like the stereotypical narcissistic, emotionally unavailable relationship. And I thought like it was a big joke, like she was making fun of how some people, regular people think, and kind of like exaggerating and everything. But then I started watching like other videos of hers, and they're all kind of like the same sort of a thing. And I'm like, I think she's actually serious. like I think that what's happened is she's so like been burned and so fed up with interactions with regular people that she's just developed all of these overly negative opinions about how normal people tend to think and behave that are just unrealistic, and giving advice that's basically ends up being not very useful to you. Doesn't CQG DOM, which is really nice, but there are some fixings that bother and I can't change them. Yeah. That's my problem too, Lucas, is like, I think that the CQG DOM is pretty good and performant. I think that the trading technology DOM is really good, but they're just not as customizable as the Jigsaw one. That's why I like Jigsaw so much, is the customization. It has the right features. Am I a narcissist for putting my own interest? Oh, no. That's not what it's about. I think this is something that a lot of people have a hard time with, especially people that are very empathetic. I think that I kind of had to learn to do this intentionally, and then being on medication, it makes it a lot easier to see these situations. My wife is an empathetic person, and I don't think that she sees it. Sometimes you've got to do the thing that's best for you, and it's going to hurt other people. Like, especially in situations where it's competitive, right? That's just the way that it is. I think there's like in the laws of power, that guy, I think the way he puts it is sometimes you have to be bad, right? The thing is knowing when that is, right? But there are situations where it is entirely moral and in fact your duty to do the thing that's best for you and your family. There really are. That doesn't make you narcissistic. Okay. I think that what makes a person narcissistic is a overtly it's not even about doing what's best for yourself, but it's more of a focus on you and how you appear, to the point that it's disrupting the rest of your life. It creates a myopia on appearances, and this is generally happens because they're trying to protect themselves against some narcissistic injury that happened in their past. I'm talking about the people where it's like a personality disorder, right? Like Andrew Tate seems like a narcissist to me. People say that Donald Trump is a narcissist. I think that Donald Trump is ADHD. but I think that you know, it happened on that. He was on that dating show, and the girl was like, "You're just not going anywhere, and I think I can do better." Right? That was the narcissistic injury, or maybe that made a narcissistic injury worse, right? And so now everything that he does is all about how he appears, right? The most important thing to him is that he is considered to be the most high value man on the planet, right? That at least that's what he claims, right? That's what's most important to him, right? And when you think about it, you want to be successful in life and whatever it is that you want to match your goals. Being the most high valued man is probably not the right goal for most people, right? So you're sacrificing other things for that. And why? Because of the narcissistic injury. Dr. Romney. Now Mitt Romney, I think that people's personalities and how their brain leads to these sorts of things are really interesting and useful to understand. So with Romney, what he is he is an overly conscientious individual. Because that's what he is. So he's all about order, keeping things orderly, and you know, we got to do a certain things a certain way, because that's the way that the system works. And if you start breaking those things, then that's bad for everyone. Sort of a you know, overly rigid thinking about conscientiousness, right? This will conflict with somebody like Donald Trump, who is not very conscientious at all and is probably ADHD. So he's going to constantly be doing things that break the rules that the conscientious people set, right? And they're not going to like that. And they're going to hate it, because it's going to be like, Donald Trump will have success in spite of all of those things, and they'll be like, why he got all of the success when he's doing everything wrong, right? Because the conscientious person doesn't realize how those limitations that they're putting are holding them back, right? Oh, is Dr. Romney a person? A woman. Okay. Thought you were talking about Mitt Romney. I don't know why I thought that. Because he's not a doctor, of course. Oof, a little bit of a strong sell there again. Wow, they sure sold it hard there. In fact, the volume turned all decidedly sell right there. I'm not quite sure what's going on here. It looks like the Japanese yen turned to the downside here. Seeing a good rise in everything else though. Like you can see here, the S&P 500 rising to 39.50 now. Pausing. They weathered the selling on the open really, really well, didn't they? Double top sellers. So when we come over here to the chart, look at there's the delta in the 10-year, the middle data series there. It's been by like pretty much the whole day. And then that sell has been the strongest sell that we got, but it was a double top, you're right. Also steepening in the 2 and 10. Steepening in the knob as well. So steepening kind of says up. But we'll see if that shifts and turns around and goes to the downside. And then you can see over here in the dollar. Sorry if we come back to this other screen, the dollar. The dollar's been a little bit more range bound, but they did fall down to a new low. This is why I was testing CQG. Let's see. Oh gosh, dang it, I hate it when it does that. Back. Opens it in the wrong tab. Nope, nope, nope. It's interesting that we're back to that 08 area, but you're actually getting maybe a little bit better price here in the 10-year. Net change. Oh, it's oh, that is cool. It's basically it's a watch list that you can recenter at any time to see which assets have moved up and down relative to that particular point in time. I've been asking, well, I guess I haven't really been asking too hard, but I really want to see something like that added into Jigsaw. I want a better market analyzer. I want a market analyzer that will recenter with the center button in Jigsaw. You know? Well, they fell down hard. I'm seeing the buying back here coming back up hard as well. I think I'm going to stay out of this for now because the flows are just really kind of wonky and you know what I really hate on Discord is you guys delete your messages. So if it's not a moderator deleting it, then that means that you deleted it yourself. Why is so many people deleting them themselves? They're not that terrible, are they? There's somebody trying to post a Zoom call link. A band. They're not there anymore. You're banned. I'm deleting this Lisa person too. They put them in like every channel. Okay, back to 08. Yeah, I don't, but I'm bothered by new chartists coming in pestering the rooms like if there weren't enough TA. I know, exactly. I'm so glad that you got to that. Oh, I didn't see that in main chat. We've had some sort of spammer just trying really hard for some reason to try and message everybody on the channel. I highly doubt that they ever got anything out of doing that, but they're just so incredibly persistent. And so I had to go through and set up a bunch of more advanced moderation stuff to you know, auto ban them before they started messaging everybody. And so now they're trying to message people with the name futures trading. They're noobs, they'll take the piss soon. The issue is like now is a time when we get a lot of new people in, right? So like the channel has been doing a little bit better than, like the stream itself has been doing a little bit better than it usually does, just a little bit. The channel overall has been getting more comments, like people are coming in and being like interested because it's the beginning of the year, I think, right? So what you don't want is the people coming in and learning all of the bad habits that you learn everywhere else, right? So it's you know, a person that doesn't know anything is easy to teach. A person that thinks they already know it all is impossible to teach, you know? The banks prefer to get people right out of school rather than somebody that's been trading forever and ever and ever, because they've learned all of this technical analysis bullshit and they refuse to unlearn it. Yeah, I think it's the Ninja Trader tutorial, but I've just been getting more activity across the channel in general. So that's probably more to do with the time of year. What do you like better in Jigsaw versus Ninja Trader? Well, that's an easy one, because the Ninja Trader's DOM, the depth and sales in Ninja Trader is awful. Almost completely useless. Even one guy who claims quants base their strategy. Oh yeah, that's a common misconception, right? Is the idea that, well, because it's hard to separate the two, right? Because you're talking about etymology of it all, right? And like how the words have developed over time. Because technical analysis originated as opposed to fundamental analysis. So if it wasn't fundamental, it was technical, right? But then technical analysis became this collection of chart patterns and filters, let's call them, like a moving average would be a filter, right? So chart patterns and filters to predict markets. And there actually is some evidence that they maybe worked a long time ago, but once the computers came along, the edges in those completely disappeared. Okay, so technical analysis, in my opinion, is much more about, should be treated much more in how it's practiced, which is technical analysis is the use of chart patterns and filters to try and predict a stock based on that stock's past prices. That's what technical analysis really is, right? Quantitative analysis does not use the same methods as your traditional technical analysis at all. So quantitative analysis is just taking market data of some sort and using that to find trades. One of the things that I like, one of the really big things about it though, is that a lot of the data that these quant strategies are using is fundamental data, high frequency fundamental data. So it's a really not technical analysis at all, the quant strategies. And like the bigger thing is just from a mathematical perspective, okay? The amount of data and analysis that you can do on a single time price data series pales in comparison, number one, to the amount of information that you can pull from the full order flow for an individual stock or for an individual instrument, okay? Because it's the orders that actually move things, and the price is random based on, well, not random, it's randomized somewhat compared to the orders so that the market makers can make money, right? So the order flow has more informational content in it than price does, for starters, okay? But then the amount of analysis that you can do on the order flow of like the entire complex, you know, all of the major asset classes that we look at, or the ones on the CME in particular that we're looking at, like metals, energy, equities, treasuries, you know, that sort of a thing. The analysis that you can do off of that is way better than what you're going to get off of just a single time price data series. So like, that's the first thing. So as an example, the most basic kind of quant strategy that I can, not basic, but popular, let's say one of the most popular kind of quant strategies, is finding a correlation between two assets and trading that correlation because they're related assets, or co-integrated assets, right? There's arbitrage trades, essentially. Those arbitrage trades are based on two or more data series in tandem with each other, right? There's some predictability. So I would argue, my argument is that any statistical aberration that you find in the analysis of a single time price data series is not going to be large enough to be statistically significant. And the reason why retail traders think that that's not true is because they're not able to see enough data, right? They just heard the strategy from somebody else on the internet and they tried it and maybe they had some success with it, and they don't have enough they don't know enough data science to be able to look over like a really huge data set and see that on a risk adjusted basis it doesn't work, right? That's kind of what I'm saying. Here, when you're looking at order flow, I would argue the same thing. It seems to me that there are some statistical aberrations built into the order flow that we talk about, like proven market behaviors. But it's really hard to make money from those as a retail trader, just relying on those, because there's so much competition for them. It's just the whole approach, I think, is so weird. It's like, here you have a piece of information, okay? Like when you get a PMI or non-farms payroll on Friday, right? That you could really trade off of. I chose not to, but I really should have. The circumstances had been different, I probably would have, right? Why would you not trade off of that piece of information? Like, it's a really good predictor of order flow. It's obvious to everybody participating in the market that these things move the market. So why wouldn't you look at the informational content? I mean, if you want to try and combine them or something like that's your, that's another thing. But like this idea that like true success comes from ignoring all of that and just trading the technical analysis is just the most ass backward way of going about trading I can possibly think of. And yet that's like the popular position. So yeah, it bothers me, Lucas, that when I see people in Discord doing that, but I think that we got some good pushback against that this weekend. We do have some Fed members later today, so that could change things a lot today, right? Anyways, I said a bunch of things there, but my main point was that just when you look at it from like a data and math perspective, it makes no sense why you would want to ignore this other data that is frankly much more influential on how things move than prices. Okay, so John Euler, I think his name is pronounced Euler's. So that this is like the cybernetic trading and all of that sort of stuff guy. I've backtested a lot of his indicators and stuff, and I've seen some really impressive things from them. So I've never been able to take one of his indicators and find something that's like really profitable from it, but they do tend to be like break even. So the things that he's teaching, particularly the stuff like you have to account for aliasing effects and lag effects and so forth, and so that the indicator is giving you up to date, if not leading indications rather than lagging indicators, right? That's all smart stuff. That's all smart stuff. But I think that he's still limited by the fact that the past history of price only tells you so much. So what the value I see in a lot of Euler's methods is like, if you're doing quant work and you're doing like serious quant work, and you have a really noisy data series, hey, instead of using a simple moving average, why not try a super smoother, right? That's where I think that there's some value in it. So I think there's some value in, I have some of his indicators on here. Like I have a super smoother on this chart in the upper right over here. But I haven't found any of his indicators that made money on their own, unfortunately. Taufen, I'm not familiar with them. I'll have to look them up. So I will go to the NinjaTrader app share like once a month to see the new indicators, and sometimes I'll try backtesting them. I haven't been doing nearly as much backtesting in the past year as I used to, but I used to backtest a lot of those. So that's how I knew that the Euler's indicators, there's without question, the Euler indicators perform better than any of the other indicators that I've seen, but they're still just break even. I saw people saying Sierra was better than Jigsaw in terms of updating speed. So I haven't seen that. But I've never, we were talking about this a little bit last week, but like the difference between two DOMs that you're gonna get is like maybe 30 milliseconds, if that. I haven't seen very big divergences. And it's kind of difficult to quantify, because what will often happen is like like level 2 events will happen in a different sequence. So you can't just like directly compare the two data series and see, like in one instance, this one will happen first, and in one instance, this one will happen first on the other side. So like to quantify it, I think that a lot of the things that you hear people say on YouTube and in the community in general about which one is faster than the other are not things that we can really quantify. But here's what I'll tell you. Human reaction speed is like 200 to 300 milliseconds. Like if under 200 milliseconds, you're fast. Okay. So in any kind of change that we're talking about that's less than 200 milliseconds, you kind of have to realize might not really be making a discernible difference to you. Which is to say, things like how reliable it is, although CR charts is certainly reliable. The features that you get, do they continue to push the envelope and give you new features that are actually beneficial, which is the thing that I think that Jigsaw really excels in. You know, I think that those sorts of things matter more, but I don't think that there's really a significant difference between the performance of the two of them. Oh, you missed this one, but I'll go over it again, Vig, and focus specifically on this. Can something like OpenAI remove available edge this year? So the reality is that we've been using robots like this in the financial world for decades, right? So we weren't using ChatGPT in particular, but for a while there, I like kind of when we started, so like around the 2016 time period, the big trend, the popular thing was like iterative AIs. So you would teach the AI like a couple of different ways to like compare values and stuff like that, and then it would just go in and randomly try different things, and then, you know, it would find one that would work, that would be the winner for that generation, and then it would use that as the basis for the next iteration, and it would just be iterations off of that, right? And then that slowly develops over time. So when you do that, basically what it comes down to is, for any indicator that comes with your trading software, there's probably a robot out there that has tried like every possible iteration of that indicator before, right? That like there's people out there doing that, and for a while they had success, and then they kind of all went kaput all at the same time during that what was it, 2017 2018 liquidity crunch. So the reality is, you have to have an edge. That means you have to have information or doing things that most people aren't doing. And ChatGPT is all about aggregating the things that's already out there. So no, you're probably not going to write a robot or an indicator with ChatGPT that actually makes money, or that actually has edge. You might be able to write one that tricks you into thinking that it has edge, but over the long run, you're not gonna make money with it. Yeah, you can't use an indicator, you have to be creative. That's exactly it. CQG LTQ is more advanced and accurate. That might be true. I mean, I don't know how they're determining that, but I'm still in the place of I don't understand why you think the LTQ means anything. Also, Jigsaw was showing 1 to 2 tick spread in NQ, while CQG there was nothing. You could see something where in CQG they might be like less likely to collate things compared to rhythmic, at least. Oh, but you're saying Jigsaw was showing a spread while in CQG there was nothing, and that was that with Jigsaw doing rhythmic and CQG doing CQG? Yeah, you can't use an indicator, you have to be creative. Yeah. But like that's like getting back to, if you want to go and take on the technical world, you know, the thing that I'm kind of trying to hint here is, if you want to take on the technical world, because it's possible, Number one, the analysis that you're going to be using probably is going to have to be pretty sophisticated. So just realize that you're going to be getting into like master's level statistics kind of stuff, right? And you're going to have to do all of your own primary research. You're going to have to figure things out that other people haven't figured out. So be prepared for that. It's hard. The reality is that it's harder than just trading the news. I use Rhythmic. I primarily use Rhythmic because it allows me to forward the data from Rhythmic Trader Pro to multiple programs. So I can still use Jigsaw and NinjaTrader together and stuff. I also use Rhythmic because it gives me more levels. Because I'm frequently found myself with CQGs feeling like I wish I could see further out. So but theoretically, CQG should, you know, like that comes at a cost. So theoretically, CQG should be able to give you more, like aggregate updates less than Rhythmic does during a fast market and stuff like that. Which is to say, like if there's 1,000 contracts here at 07 half and they decide to pull, on Rhythmic, you might just see 1,000 pull all at once, whereas in CQG, you might see that there was 100 lot, a 500 lot, you know, and you'll see it change in like 4 updates instead. And but both of them do this is that when they're having difficulty pushing the data out to everybody, they start to combine those updates so that less stuff is sent over the wire. They say that it's unfiltered, but that's bullshit. They all filter to some degree. They're not showing you the exact thing that you would see if you were connected directly to the exchange for the data instead of through a middleman. I still have a hard time seeing though why you would see a 1 to 2 tick spread in NQL and CQG. There was nothing. That's kind of interesting. Because that's kind of suggesting that the other feed that you're getting is just like straight up giving you something that's not accurate, right? Yeah, being continue. So are you able to compare Continuum versus CQG? So it seems or not, it seems to me. You guys all keep telling me that Continuum is not as good. Because when my choice was Continuum versus Rhythmic, I was like, nah, Continuum is not very good. Bank of England's pill is speaking right now. Well, it's not as good, not since CQG's. What do you mean by since they CQG split? But being not as good. I do believe that I have tested like CQG against Rhythmic, but that was like years ago, right? But the last year, when we were comparing CQG to Rhythmic, there wasn't really an appreciable difference. Do you trade in currencies as well as mostly stock? Well, we definitely watch currencies, but almost all of my trades here on the stream these days happen in the micro 10-year. I say that with some trepidation because I don't want people to be like, well, I don't want to trade micro 10-year, so I'm going to go somewhere else. I think that the things that you're going to learn from watching us here and the things that you're going to learn from watching the treasuries trade are going to be like really valuable anywhere else that you go. But one of the things that we talk about is that you really have to watch the whole market. You want to see where the money is coming into and coming out of and so forth. So
Yeah, we can identify at times situations where something is moving. Natural gas is like really on the up move this morning, by the way. Are they the big winner today? Yep, up 8%. Followed by Kappa. Oops, I sorted it the wrong way. Yep, natural gas followed by HT followed by oil. And the biggest loser is the ZB. So pretty much everything is up. Because the ZB didn't really move. I mean, it's down, but only a teeny tiny bit. I believe CQG is a native feed you get when using their platforms. If you want any other thing, you get Continuum. So are you saying that if you want to use Jigsaw, that you're actually getting Continuum? Like if I go to AMP Futures and I use Jigsaw, I'm actually getting Continuum? Or what is equivalent of Continuum? Because I didn't know they wouldn't call it Continuum, but because Continuum is that data offering from was only for NinjaTrader, it's my understanding. He says, I think so. Oh yeah, have you tried IQ Feed and DX Feed? IQ Feed is really good. So I had some issues with IQ Feed because it didn't play nice with OBS, because IQ Feed will straight up manage your CPU. It will come in and say, no, I need the time right now to be able to keep up. You can't take control. So the OBS would skip frames. So IQ Feed did not work for us, and it is much more expensive, but it is just straight up a better data feed. It is straight up a better data feed. IQ Feed is. And DX Feed, I don't think I've ever used DX Feed for futures, but they're kind of like the new kid in town. I thought that their whole thing with stocks was like really, really smart. Like to be honest with you, like here's the thing, is again, like human reaction time is like the lower end is 200. Okay, you're getting below 200, you're really fast reaction time. So what that means is that when you're getting into things that, you know, a difference of 30 milliseconds or whatever between two different things, you're talking about a difference that you as a human are not fast enough to react to. That doesn't mean that they don't matter, because they can definitely add up, right? You're adding 30 milliseconds here, and you're adding 30 milliseconds on your mouse and 30 milliseconds on your monitor, and all those things add up. It does matter, okay? But you know, I see some people where it's like the lag that you're getting from between your mouse and the update from your monitor is probably greater than the difference in latency that you're looking at, right? So that's the one thing. And so if you're to that point where like the differences matter that much, you really do have to wonder if the strategy is appropriate for you, right? Like you're doing something that a robot needs to do, or that you need robot assistance to do. You like, maybe you can say, I want to turn the robot on or off. I want to decide which way it's going to go, but I'm going to use this thing for it to actually enter the order when it sees that thing, right? So if that is the case, where would be better places for you to go, right? So one is you can just do the informational inefficiency where there's lots of room and plenty of time. And that's probably more appropriate for most discretionary retail traders, right? But the other side of it is that you could try and search for a other inefficient market. So like right now, it's like NQ is an inefficient market, but it's because it's so wild and so fast, right? So a better
option might be to get the DX feed thing and go and trade individual stocks instead, right? Because there's not nearly as much competition for those, and there's like wide spreads and stuff, wider spreads at least. They were shown 7 3-figure numbers in 1 point. That would be a little bit different than reaction time. So if the number is flashed on the screen for only 1.5 seconds, and can they absorb all of that information and interpret it and stuff, that's different from how quickly can you actually like push the button after seeing something, especially if you have to interpret the data. So like astronauts get below 200 milliseconds, and like your nervous system can't go faster than like 50 to 100 milliseconds or something like that. Like if it's like a reflex, you're talking 50 to 100 milliseconds. So slightly different, right? Octavia says actionable. So I guess what I'm really asking, Lucas, is how have you looked at that DX feed video and considered doing it in stocks? Because what you're doing might work better there. What matters is that the feed is fast enough for you to interpret the data. Well, yeah. So like this thing where you're saying that on well, here, I'll try and pull it up over here and I'll see what I see. Right. He's saying that on NQ that he gets a spread and that he doesn't see that spread when he does it on NQ. That would be something that would concern me for sure. That would make me that would be something that would make me question if I can really trade that thing. Well, I don't really see a spread on NQ at the moment, so this is really something where it's like I feel like it's just too fast for you to really do shit. If we come in here and should have pulled it up earlier. We'll add the LDQ. Seems like equities are on a tear here. Maybe right there at 113.60. Oh, I have it aggregated. That's not right. Now it's really gonna be wild. Oof. Oh, there it is. I'm like, how come it's not pulling up their entry? There we go. And I already feel it like taking more strain on the machine. I don't know if I have order entry on.
No, I missed it. My orders go through market maker and get arbitrage there, whereas in futures my orders go to the exchange and I can trade against other traders. So only if you're using market orders. Or rather, if you use limit orders and you're taking advantage of the spread, you should be able to make it work. I don't know if it's actually... There we go. Now that'll actually do it, but it's probably too late. Oh, you know what I need? I need my order column. There we go. Dun, 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 dun. Right now, with the amount that NQ is moving, it's manageable, but it does look a little bit chunky, doesn't it? I'm not sure that I could actively do this with as many instruments open as I have. The spread was pre-market. That could be. But just watching this data right here, that wouldn't be sufficient for you to do what you're doing, right? It looks a little chunky to me. Well, I might have picked the wrong time to come in and do this because it looks like the trend is turning down and I'm not doing any kind of informed trading on this at all. I was just kind of going along with the trend and taking on the risk. Does skip prices quite a bit. That was good. Come on. Don't make me look bad, NQ. Come on. This is definitely common to have a bit of a spread in the pre-market before they get going, yeah, in the equities. it sure seems to me that like that 9 o'clock time period is like if you can get a sense of the direction that it's going correctly, that can be a good time to trade for sure. But the S&P 500 is just so random in general that I was never able to make it work. I think the reality was that the amount of risk that you have to take on to trade those treasuries is just more than I'm willing to take, I think was the reality of it. Okay. Come on, fill me, please. Please. Oh, it's so close. Might have just missed my opportunity to get filled there. Well, there's our bell. It's time for me to get I'm moving on out. Come on, fill it. I'll do all of them here if it gives it to me. I'll add one. We'll give it the last 5 minutes here, but if not, then we'll just close it where it's at. If not, scratch it. Maybe we should just scratch it right there, because they came back down to the other side awfully quickly, didn't they? That means that my basis isn't probably not low enough. But it looks to me like I probably need to come in here and like increase the update frequencies on this and stuff, right? Like this should be like 7. See, now it's a little bit more responsive. I had an NQ up and I was just putting some orders on it to see how it was going. So Mezua direction. Well, when I started, it was going up and now it's not. Now I need to get out, huh? I probably should have had, well, maybe I can just put it right here. This order up here, like just barely didn't fill. I'm a little mad about it. Because I would have looked like, if that had filled, if I had it at 64, if I had it there 1363, then I would look like a genius right now, huh? No. But there's not really edge in what I'm doing here, right? Nope, that's no good. Now we puke. Now we puke. That. And it paused there a little bit when I went flat. I think some of the issues here is I got like too many instruments open and stuff. You know, people that do it successfully with, oh, I don't know what you're talking about. I was just taking on risk just to see what it felt like. So I'm using like 50% of GPUs, so it's probably not the CPU that's holding it back. I do wonder if I turned off all the other data, if that would change things though. See, I have things pretty chunky overall, right? Over here in the treasuries, I have them a little bit chunkier than the default settings. Yeah, it's time for me to get going too. I'm just gonna close that now. I really don't see how people trade NQ. even if so I do think it's a little chunky. Even if I had like a really even if I was using IQ feed here and everything, I don't think that it would work. It can just shift too quickly. The amount of risk that you're taking on is too big. Even for small scalps. I don't like it. People try. I'm really kind of wonder if it's like really worth the effort, that because I see so many people doing it on NQ. Well, it's time for me to get going though. Let's close that. Oh geez, you can just feel like it was definitely taking up some processing power. Zillow Group shares up 8.1% after Bank of America Global Research raises to buy. Ooh, I like it. Interesting. I'm gonna have to go look at that. All right, guys. What should we put on today's title? Okay, guys. I will see you tomorrow. In the meantime, stay excellent, team.